Hey guys, morning. So, what a morning, what a overnight, what an overnight. It's been a while since we've been locked down as much as this. What we do have on the quote board is 750,000 contracts traded on oil. We were as low as 27 somebody. Wow. On oil, OPEC more or less disintegrated. Disintegrated. Wow. We limit down on slash ES 5% last night. Make sure you have your limits set up. Make sure you have that set up. We are trading the each contract still HIJKLM. Look at your M contract also for your volume. I don't know if well I think Top Step only looks at the front month. I already have the ESM up here. You can see we have a lot less contracts on the M contract. Volume is wacko way out of range. So be very careful on what you do on the open here. Oil has not been reacting as yet. It's 9 a.m. You can see we just stripped off the more or less the open here. The high was 3287 from last night. This is a 5-minute chart. This is a 15-minute chart. Change this. Don't know if I should actually change this to a 5-minute chart. We limit down. You can see the point of control is lower limit. We had some action going into that limit lock. The expectation is to drop off the face of the earth to that 7% one day move. Always look for your numbers. Wow. Be very careful on trading. Know where your lock points are. We're about 7 minutes away from that open. If you guys inexperienced, do not tempt fate with this. Do not look for very good opportunities. Trail, stop, use your micros. Trail, use extended TPs. This gonna be flashy all day. I have some stuff that well, I already sent out instructions to my broker already on what I want to achieve. So how my stuff is set up is like this. I have holding 30 Teslas on my medium term stuff. So what I do have in Tesla is holding my Teslas and having 75% of my Tesla worth were expected to be covered. Hopefully I'll survive that. My average entry is 288. So what I have is I shorted Anthem to recover that, and holding Tesla from 288, which will get a big hit this morning. The expectation we can see at 20 to 21% on that oil. The easiest risk to take is on oil, but you would need wider stops. Looking for value volume. Market is already open, so based on what the reaction is. Make sure that you trade, if you're trading, trade singles. If you're trading that open contract, in our view, that is the best way to deal with that. Be at the point of control. You can see there is a lot of volume to the downside here. And the trading range is a bit of to deal with. So what I do have is I'm looking for a trigger at 33 flat, or 33.50. My entry trigger is at 33.40. That is the only trigger I have on oil, looking to see if I could get into lean of the 33.40 to 50 area. We made the adjustment and look for 50 as the entry. We take one tick in front. You know exactly where our stops are located. If we do get shot, we know exactly where our stops are. You can see we look for this high to lean on here. So we actually looking to lean on value area high, one tick in front of that, enough structure protection. If it does bounce and go up, get killed, but the risk reward trading off for this. I forgot to ask for if they're still trading the front month. More than likely it is the front month, which is the H contract that they're trading. Make sure you know your lock limits in and out. So alright, I need to open the chat box here. Good morning, guys. Let me just open the chat box. So limit down. Well, I had a couple of experience trading in environments like this. Was election and stuff. Where you can look at also is what's will raise FT take on this. More than likely it's the same thing. So we only have one working order placed. I'm trading a double off, looking to trade a double off of the on the ES there. Looking for point of control to lock in, try to get in on the 49. Make sure my stops are up to the top using 79 just for the whipsaw action. If it does come, don't want to take risk in this level because this level is more or less worthless to us. We're looking at value area high, looking for the retest of point of control, have our 1-to-1 and then manage the second part of the trade. We're looking for volume to pick up. You can see lack of volume on the open here with regards to that. So what you would expect to see on the ES is a pump and dump situation, more than likely on the open. So you would see flash up and then down. If it does flash down to that 2760 level here, mark off this on your chart. Please have your stuff marked out. This is dangerous trading, people. Dangerous. We cannot tell you guys how much important today is for probably the rest of the year. So we have a lot of things going on in the market. What triggered, in our opinion, what triggered that? You can see what that asking price is in one demo. What it looks like, we just open, boom, out. Just locked out. Just got locked out. The market is locked out. That is your 27 to 60 right there. You just get locked out there, gap down. You wouldn't even see it regarding there. Boom, 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 boom. That's the low. Can't even see it on the chart. Let's see if I can pick it up on. Yep, they just get locked out at 7%. Nobody could be trading that. That's big boys. Once you see that amount of stuff on it, nope, no want to be involved in that piece of crap. Just got locked out. The hold is probably not what you're looking at right now. Meaning that you can't see anything to actually trade off on that level. If you want to be short on oil, you may have a good possibility there, but for me, that's a no-no. With the market being on lockout on ES, you would be locked out. You should consider it locked out for yourself. What we're looking for is high probability trades, only high probability trades. If you're leaning on the short side, make sure your stops are above 32.85 to 90. 3300 will be especially, I think $300, $3. Wow. We only have one trade that's working right now. So if you're short on that ES open for that same flicker we talking about, just we want to see traders make up their mind, because there's going to be some serious order flow. That 3/4 million is probably a little bit since what the last call for. This is pump and dump situation. This was the play we're looking at. And guys, don't go chasing. This is what you would call rip open time. This is where you would see. Alright, you want to see what the position, the quote board looks like. You got your 7% out. Alright, so you're 7% out of the way. Next up is the 13%. So how this is calculated is overnight. So if you have any questions, you can just pop it across here. Why do I have two of these open? Alright, so always make sure that you're trading small, trading smart, trading safe. I am only looking to lean. I'm playing this game safe. I'm only looking at 3350. Want to see if there's a retest in this 40 to 50 range for the value area high play. These bars look small, but they are large. Do not, I repeat. I spoke to a couple of the guys who exactly traded with me. A couple of them went to rush in last night. Said nope. Look for your technical points. If you do have a failure on your trade, it's a failure on your trade. Do not cry, do not curl. The market is not after you, the market is after everyone this morning. Everyone. So alright, so halts. I think the first halt is on 50 minutes. Let's pull up Bloomberg and see what Bloomberg says. Hopefully I would not get striked for this. You could always listen to FT and his stuff. Probably might have a look at what FT did this morning. Was looking at this morning. He's a more experienced guy here. I'll tell you that for sure. Don't know what the Dow is doing. Da-doom.
14%, John.
Kelly Lights, thank you. Here's your update on the market then. 3 minutes into the session, down and down hard. The biggest move low we've seen on the S&P 500 since December 2008. Taking a closer look, Abigail Dillisel.
It's really pretty incredible, John, the selling pressure that we are seeing today, down nearly 7%, close to that first circuit breaker. And as you mentioned, the worst day since December 1st of 2008. Even more incredible, the speed of this selling pressure over the last 12 days, down more than 18% at this point, putting the S&P 500 perhaps on pace for one of its fastest bear markets ever. Going back in history, it took 42 days from the record high back in 1930 for a 20% decline. In the decades that followed, it generally took 200 days or more for the S&P 500 to decline 20% from its all-time high. One notable exception, of course, was back in 1987. In the financial crisis, it took 274 days from the October 2007 peak. Given last year's melt-up, John, the fact that we now do have the S&P 500 down about 19%, almost 19% from the record high. This is a true definition of last year's melt-up, taking the stairs up and now the elevator down.
Big time, Abigail, big time. Thank you very much. There is your move. Taylor Riggs told you about it. Down 7% on the S&P 500 and triggering a market-wide trading halt for the next 15 minutes. So on the S&P, we are down 7 percentage points. If we can just in a moment get those full screens back up on the television again to give you an idea of where the next level breaches that you need to go through actually are. The first breach, 7%. We'll pause here for 15 minutes. We'll get underway, and then there's another level that we need to be hitting on the S&P 500. I'll get that to you in just a moment. I want to bring in Bloomberg's Mohammed Al-Erian now, and of course Chief Economic Advisor to Allianz. Mohammed, great to have you with us. We've triggered the circuit breaker. We're down 7, 15-minute break. Next move, you need to come down to 13% to get another 15-minute break at this kind of level. Mohammed, help our audience out on a morning like this morning. What's your advice?
My advice has been what it's been for over a month. Do not buy this dip. Respect the technicals. Respect the fact that we have lost 3 key anchors. This will sort itself out, but will not sort itself out before some further damage, unfortunately. You should also not panic. Behavioral science reminds us that people tend to feel forced to do the wrong thing at the wrong time. This is a reality where you're going to be standing on the sideline unless you have holdings that are likely to default and you can get out. But otherwise, I'm afraid to say this is you stand on the sideline and just wait for these technicals to play out.
9:45 would be...
Mohammed, I want to talk about credit with you in just a moment. You mentioned the loss of these 3 anchors, the 3 pillars of this equity market. Go through them for us. What's the most critical part of support that we've lost that you don't think we'll be getting back anytime soon?
So I don't think we get any of them back anytime soon, and that's the problem. The first is the anchor of economic and corporate fundamentals. I think people now understand what you and I have been talking about for a month, which is that the coronavirus actual and feed effects are the equivalent of an economic sudden stop that simultaneously destroys demand and supply. 2, we have lost a central bank anchor. For a very long time, elevated asset prices were protected from weaker fundamentals by this amazing faith we had in the central bank's ability to repress financial volatility. The reaction last week to the emergency 50 basis points cut has exposed the limitation to that faith. And finally, we have lost some of the market anchors. The OPEC decision, the Saudi Arabia decision to abandon the swing producer role is an example of that. What does that do? Yes, it's going to give a massive windfall to consumers, but not before creating significant damage in the high-yield market. And you and I have talked at length about the fragilities, the structural fragilities of the corporate markets.
Mohammed, you and I have also talked about this process that we're working through where we question the Fed put. From what I heard from you just then, though, it sounds like you've got your answer. There is no Fed put anymore. Is that too premature to make that call?
You know, that's more extreme than I would put it, because we are going to see a whatever it takes policy approach from the Fed. They are going to throw so much liquidity at this thing. What it will do is boost balance sheets, and that's not bad. It will also put in place better conditions for the recovery when we get the turnaround, and we can talk about what it takes. But it's not going to restore economic activity. I keep on telling people, a lower mortgage rate and cheaper credit doesn't make you go back on a cruise. It doesn't make a CEO lift the travel ban. You need other things. So my one concern is not that the Fed isn't going to respond belatedly with a whatever it takes approach. It is that it may use valuable ammunition too early, as it did last week.
So, Mohammed, in the equity market right now, we are down 7%. We have gone through the first breach, which means a trading hold for the next 10 minutes or so. It was 15. We've gone through about 5 minutes of that. You just walked me through some of these levels that we're going through in credit, not equity. We took out the December 2018 wides in Friday's session on high yield. It's about 550 basis points. The last time we had a crude shock and a growth scare, high yield spreads were out through 800. Are they the kinds of levels in play that you'd be thinking about on a morning like this morning?
I don't want to be too.
I am, John, because there's another factor.
Well,
You have a massive overhang of triple B minus credits. Names that are holding on to investment grade that have migrated all the way down to triple B minus. Why? Because with very low interest rates, the right thing to do from a short-term capital structure element was to increase debt and take out equity. So you have this massive overhang of triple B minus.
9 minutes.
They are going to be downgraded, quite a few of them, because their economic and earning prospects have worsened. And when they get downgraded, the ability of the high-yield market, already disrupted, to absorb this new inflow is going to be limited. So people are going to get out of the way. So yes, I can unfortunately see risk spreads gapping quite a bit.
Is this a turn in the credit cycle?
Yes, it is. Most importantly, what's going to happen is you're going to get more of a freeze on new issuance. Companies with vulnerable balance sheets, meaning little cash, high maturing debt, are going to have difficulty funding themselves. And yes, there's going to be an increase in credit defaults, unfortunately.
Mohammed, before we let you go, I want to understand what the circuit breaker is. You touched on that, and you said we come back to it, so let's finish there. What can be done here? If OPEC Plus gets back together and puts a floor in crude, that might help, but that doesn't get rid of all the other problems that brought us to this moment. What do you want to see from policymakers?
So I would like to see four things, John. And there's nothing new about what I said about this. One is first very focused measures to do three things. One, accelerate what is really needed, which is two medical advances. First, to contain the spread of the virus. Second, to increase immunity through a vaccine. Second, to protect the most vulnerable segments of the population. And thirdly, to focus like a laser on market functioning, financial market functioning, so that we don't get market malfunction making things worse. Second will be a transition to a whole-in-government approach that addresses long-standing impediments to high and inclusive growth. Third will be putting all this in the context of an overall international policy approach. Remember, this is a global problem that requires global solution. You need collective actions here to address this properly. And then when you get all this done, which I hope we can get this done quickly, which is not clear that we can, okay, reassurance to the financial markets. And then things are going to start turning around.
Mohammed, it's great to catch up with you. Really fantastic. Mohammed Al-Erin there, weighing in on some of the market action as we open lower by 6% and we add to it. We're down 7 and trading has been halted. I want to bring in Taylor Riggs now just to get you up to speed on some of these key levels when trading restarts and where we go next. Hey, Taylor.
Yeah, John, back to some basic math for us here. So as you know, right after the opening bell around 9:30, stocks fell 7%, triggering that market-wide circuit break. We're set to open again, back of the envelope math right after 9:45 or so, depending on where the books are. As you can see there, maybe off about 7.5%. We will reopen. Then the next limit down should be 13%. If we hit that level, the markets will then close again for 15 minutes. Reopen, markets then close, open if they fall 20%. The market shuts down for the day. The 13% limit should be around, let's see, a 27.86, I believe. So let's again see how we open in just a few minutes here. In about 2 to 3 minutes time, we'll reopen. The next limit down to look for again off 13%.
Quick maths from Taylor Riggs. Taylor, we appreciate it on the spot. Taylor, thank you very much. We are halted for the moment. When we reopen, we'll bring you those prices down 7%, triggering a 15-minute halt. Mohammed Al-Erin has been a fantastic friend of this program over the last couple of months, a real guide for where we're going through this market.
My stop is at 80.
He said, Priya, do not buy this dip. You need a bit of humility. You feel the same way about this market at the moment?
Do not buy the dip.
Yes, I do think you should have enough liquidity. So, the one thing I would say maybe buy some is treasuries. If you own a ton of risk assets, the only safe haven asset right now is the 30-year, which, it's shocking that I'm saying it's the 30-year, but the market's essentially pricing in zero on the funds rate, and the market's pricing in yield curve control and QE from the Fed. So the only area where actually treasury rates can fall is the 30-year, which is why the curve is bull flattening. I think the rates market is absolutely pleading, screaming
we have one single out
for
on
policy
the
action, not
on
just
the
the
oil.
Fed, but I would say coordinated fiscal monitoring.
Anisha, this is so difficult for people to get their heads around. Why would you want to buy a 30-year with a yield of 85 basis points? It's the risk mitigation characteristics in your portfolio that you can get from US duration.
Exactly.
Is that the attractiveness this morning?
It's the diversifier. And I think right now it's a return of capital rather than trying to make money somewhere. I mean, that's the key thing here, right? So you just want to get your money back. And so treasuries are going to continue to provide that diversification that I think a lot of investors, probably put to the sidelines up until very recently with all that's been going on. And I think to the point of just global coordination with where rates are today, for a while the bond market's been saying there's lack of inflation. But it also had a little bit of a ceiling on where rates could go because of where global rates were. The German Bund, for example, that gap was pretty wide. We're seeing that narrowing now, but now what we also need to see is a coordinated response on the ECB side to say, okay, here's a fiscal response that we've been waiting for a while, right? The economies there were pretty stagnant. They should have done something a while ago. Let's hope this pushes them over the edge to really kind of think outside the box to get something.
There's a joke about Europe that they do nothing, they don't do the right thing, and then a crisis hits, and it's the suboptimal outcome all the time. Bruno Le Maire, the French finance minister, was speaking this morning about the potential for coordinated action. They're the kind of words we throw around in moments like this. I'm not accusing either of you of doing that. What does coordinated look like? What do you need to see? Mohammed mentioned this old idea that, oh, look, coordinated, but it's actually just correlated. The ECB is doing its thing, the Fed is doing its thing. What's coordination? I mean, this is a time where they should meet together, right? I mean, this is a time where you have another G7 type of summit. You discuss what type of policies and things you're thinking about that are outside the box to kind of ease up the debt constraints that Europe has, for example, right? Blow out the debt a little bit. You need to have some sort of, I think, measures in place that, you have to kind of go outside of these constraints that you put on yourselves. And again, a lot of this coordination is going to be talking with other countries in seeing that it's done hopefully at around the same time to tackle this issue. Kristen, your take?
So I think the downside to all of this is really going back to liquidity and credit concerns. We're not there yet. So this news about oil, well, it's very alarming. We're not quite there yet. This is not a situation where we're talking about the financial crisis. When you look at the industries that are most exposed and the sectors that are most exposed, it's energy, it's travel, it's leisure, and going back to what we talked about in terms of small to mid-sized businesses. So I think at this point in time, yes, we do need that fiscal stimulus. We need to use other tools than are the traditional.
If oil doesn't react early enough,
spend our way out of this. I think we're all in agreement. But I also think for those who have been, we tend to think of clients or investors as they're all the same. They're all doing the same thing. They're all fleeing to safety. Well, we have clients who have been invested in diversified portfolios, high quality portfolios, where as of Friday's close, they were only down 4% versus the broad sell-off. And so I think the question right now is, if you're sitting on the sidelines, do you get in? And there are some opportunities if you're looking 12 to 18 months out to get in.
Well, right now, I think a lot of people are nervous about getting in. It is 9:47 Eastern time in New York City. We gapped lower by 7%. That was the first breach to trigger a trading halt. That's exactly what's happened. We will reopen in about 1 minute and 15 seconds. What I'm going to do, I'll bring you that price action in just a moment. I want to get you some more south side action, and this is from Rabobank on the US economy potentially falling into recession, saying the following. If the Fed cuts 25 basis points at each scheduled meeting, they will reach the zero bound in July. However, the way the FOMC is behaving at the moment, we cannot rule out another emergency cut of 50 basis points. Therefore, we shift our forecast for the Fed funds target range hitting zero from September to June. Joining us now, I'm pleased to say, is Rabobank senior US strategist Philip Murray. He joins us on the phone. Philip, when Rabobank made this call on rates hitting zero in 2020, months ago, I laughed. I look like an idiot now. Philip, how quickly can we get there?
Well, I think it's going even faster than we had anticipated, because our original expectation was that they would get there by December, and then when Corona started to creep up, we thought, well, maybe September. And then after the emergency rate cut by the Fed, we shifted our forecast to June for the Fed hitting the zero bound.
I've got Priya Misra of TD next to me. She's talking about the other tools that maybe the Fed could deploy. Philip, what are you looking at besides just rate cuts?
Well, I think once they hit the zero bound in June, I think they will first start with the two things they already tried before. It's, of course, quantitative easing, and they have some room for that because they already started to normalize the balance sheet somewhat, and GDP has grown, so there is some room for that. And also forward guidance, so they can promise to keep the Fed funds rate at zero for an extended period of time, and that would also help contain longer-term interest rates. I think those are the two measures that they will resort to once they have hit the zero bound.
Hey, Philip, it's great to catch up with you, and I don't think it's too premature to say this. Fantastic work on a brilliant call that's just looking better by the day, day after day. To Rabobank there and to Philip Murray, thank you very much. Stocks resume trading, and we roll over by 7.22%. Remember those breach levels that we talked about? We breached 7%, trading halted 15 minutes. Your next level to hit before we do that again is 13% on the S&P 500, short of that on my screen right now. Let's get you some sector price action, just peel this back layer by layer. Here's Bloomberg's Abigail Doolittle.
What a day, John. The sector action that we're seeing right now, the most selling that I can remember in recent time for sure, going all the way back to 2008, when we used the group rank return function in the Bloomberg terminal, we will see a sea of red. The best sector is the utility sector, down 2.6%. The worst sector, on the other hand, energy, take a look at that, down 9.4%. Also plunging to that degree. The financials down 7.5%, tech down 6.3%, communication services down 6.2%. There is nowhere to hide. Up top, those sectors that are outperforming with huge declines of 2.6% or more are those defensive sectors. So this is a truly bearish sector composition. On the year, though, John, it's even more stunning. There is one sector up on the year, that's the utilities, but on the year, the worst sector, energy, down 37% right now. Financials down 24%, materials down 16%, and industrials down 16%. There is nowhere to hide in what seems likely to be a bear market for the S&P 500 very soon, considering that a couple of those sectors, especially energy, very much in a bear market, John.
Abigail, thank you very much. The price action brutal across asset classes. Let's drain the drama out of the situation if we can and bring in Tony Dwyer, Canaccord Genuity Chief Equity Strategist. Tony joining us on the phone. Tony, you're a good friend of this program, and the conversations we usually have, typically constructive, never dramatic. You park the hyperbole before the conversation begins.
I got in my trade right here.
Order filled.
Well, clearly every single asset class now has priced in a little bit of panic. And John, as you know, we downgraded the market on January 20th when it got to our target because there was euphoria, and now there's the opposite of that.
Stop filled.
Panic. So typically, what happens in a situation like this, once the market settles out at whatever the low is going to be today or tomorrow, you get some kind of increased volatility again, almost like last week, maybe even more dramatic. You set the stage for a multi-week rally, and then which works off the oversold condition and the panic kind of feel that you got out there. And then you test the low when the weaker economic data comes along. So this is a human nature situation versus a fundamental situation, but definitely it's getting pretty dramatic.
Tony, you and I often talk about having a plan, maintaining discipline, and whenever you bring up those topics, I usually say the same thing. You can have a plan and then you get punched in the face by a growth scare and a sell-off, and it all goes away. How do you maintain a plan and execute with discipline in a market like the one we're in?
Well, so for me, I can only speak for me. And that's a great quote from Mike Tyson. You know, everybody's got a plan until you get punched in the face. And the market has a great way of punching people in the face. And I had a broken nose many times in the last 35
so this is a long term. Here, that's 618.
Those many
20% we were talking about.
Unless something
I have a long term buy sitting there as an option. That is just an option trade. I have participated tag for today. Is part of the control system we have
that Saudi Arabia is going to start an oil war and dramatically impact high yield debt. But
we're looking for is a retest of that 15%.
Not buy the first bounce, but to wait for a multi-week rally off of an oversold condition.
28.50 is the sell.
When the news is getting pretty bad,
but we did. We bought
so
20%, the 61%. I just make it small.
Hey, Tony, I won't ask why you got your nose broken. Tony Dwyer joining us on the phone, weighing in on the market. Let's get some final calls around this table, shall we? Conviction calls in a market like this. Can you have them, Priya? What are they?
It's very difficult. I would say market functioning is a big issue right now. I think we're dealing with social distancing. I mean, I didn't even know what this phrase meant 2 weeks ago.
Yep.
So you've got, you know, the sell side that's working across locations. You've got a sell side or balance sheets that are just much more constrained
always
today.
A fully mechanical trade. You can see where the market pause.
As long as credit is underperforming, default risk is getting repriced. I think owning something that can help hedge against risk assets still makes sense. I think we know that the Fed's probably going to go to zero. So I think saying that rates are going to be low
don't
for
know
a
if
while
I get filled on my option as
until
yet.
we
After
get
wait to check
fiscal
to make
action,
sure
I
if
think
my
the curve's
option
gonna
got
keep
filled.
flattening.
I was looking
I
at
would agree with that. I think
27.
staying higher credit quality, having fixed income is going to be the most important. And if you have the ability to stay in cash, I mean, that's ultimately, I think, what you want to be in for some time.
Kristen?
So very similar. I think the diversification argument has held ground year to date, maintaining portfolio quality, both in terms of equity as well as credit. This is not the time to chase some type of quick V-shaped recovery. Our base case is this was going to be much more U-shaped anyways. So if you're looking to invest capital, stick with quality.
So we confirm that we got filled on the option, although it was
you will
wide.
remember this one. Chris
Paid a little more than we needed
Nisha
to
Patel
pay.
joining us around the table through the market open in New York City. A market open that looked brutal, is brutal, and we're just off session lows right now on the S&P 500, still down by 6.6%. The next couple of days shaping up as follows. Let's get to your trading diary, shall we? What you need to be watching through the week. Tuesday, we get China PMI and CPI data, as well as Eurozone GDP plus.
Right?
6 more US states are holding Democratic primaries. Politics
wait,
taking a backseat to the
10 a.m.
markets this week.
Wait to be triggered. Wait to be triggered.
OPEC releasing its monthly oil report, and we get US CPI. Thursday, US PPI
Just got
and
filled on
initial
a
jobless
secondary.
claims are going to be a huge focus over the next couple of
That's
weeks.
it,
And we'll be catching up with the ECB.
Meet
Christine
somebody.
Lagarde at the news conference coming up later this week. Should we get you some price action? Cross asset worldwide, 26 minutes into the session in New York City, we shape up as follows. We are down hard by more than 6% on the S&P 500. If you switch up the board in the bond market, what a bid we've seen come into treasuries. 2s out to 30s, down 40 basis points on a 30-year. On a 10-year, all-time low, south of 0.5% at 47 basis points.
You're looking for
28 and crude down
15 to 20.
Down a little bit more, and down a little bit more, and down a little bit more. From New York, full coverage on the markets worldwide on Bloomberg Radio and on Bloomberg TV. From New York, for our audience worldwide, this was the countdown to the open. This is Bloomberg TV.
The big boys and coming into the market. Yeah, whatever. You on your Bloomberg. Always trade your technicals. Always trade your technicals. Always trade your technical. Forgot to actually show you guys that because I was setting up. That was the only place we were looking to buy. It was pretty obvious. Here, look at. What I want to see is 10 to London close. You're looking for 28.10 to 28.20, looking for price action to reach up there, then down through. We got the in and out. Made some reasonable money this morning. Everything covered. So not too quiet, not too shabby at all. That is why it's up. And if you're trading that, how about you trade the option spread? Where it's not a naked option, there's a couple of call option. Sorry, top of top runes. Still on a little bit. Quite at the markers yet. That major area looking to kill right there at 10 a.m. Just have to watch where your stops are. So if you're making sure, make sure with your stops what the location is. 41 is your high. Look for the retest between this is the kill zone here. You're looking for that value area high. You're looking for your point of control to start a flip if there is enough momentum to the upside to provide that opportunity for you to actually go after it. $68.40 would bring me to 70. 68 is your high. Be patient. Patience is required. If you're looking to go short, 40 to 50 is your short position. Make a trade that is where we just look at the lagging entry. Looking for that lagging entry inside the market. Got out no technical stuff this morning. Not too bad on that side. One more micro account. So made enough money for lunch for the month. Yippee, whatever. It was an option sheet. So when I bought option, I bought a single option. Well, two full lot option there. Made enough money for probably the Christmas. I need to check my account. So that was we set up this morning. That 618 is the expected move to the downside. We was waiting to see if we get locked in or locked out on the trade. Getting locked out on that trade would push for us. So once you see that first 5% lockout, that is how we actually trade that. Paid a little more for the option itself. The fall is pretty high, so made a little less money on the option itself, but made money. Close shop, rack it up. Trying to catch that falling knife is not something you should be trying to do in futures. If that was a futures trade, you're dead in the water. If you're trading at micro, you have to use like 30 points as a stop, which is not good, especially if you're trading 0.5 of a lot. That is, we got in 0.6 and got out the entire thing. Yes, we know. Being patient, Patience is always required in the environment. Always know what you're trading, when you're trading, how you're trading it. Make sure if you enter, you should be minimally stop loss at 33.70 to 75. We're looking at getting an entry at between 40 and 50. What you could do is have your lagging entry in and in. So if you're looking at your lagging entry, you're looking at 40s and 50s for your lagging entry. For your test your lag, watch your price action, watch your time. Make sure you know when London closes, you will see some fireworks going off again. On the ES side, we don't have a futures trade on. We're looking for that 28.20 area to lock in. We know that what is stop to do, the stop at halt, so we know where the POC is, we know where value is, we know where volume is. So we look for the POC, look to see if they want to push back up into the area. Once they push back up into the area, you want to, if you want, you just drop in your short. If you're trading micros, you put your stops above that 30 area, that 28 30 area. So make sure you know exactly what you're doing. This may become a bloodbath today. Well, that's stuck. Yeah, a lot of people just once it have enough price action, usually that's what happens to free charts. So patience is required. Yeah, you can see you follow your delta. You can see your delta to the downside was wavering. We took the small shot 3 o'clock here. Looking for to see if we get the drop out. Dum. Pretty happy with that ES trade. It's a good thing it went down that low. Otherwise we wouldn't have gotten filled on the ES because of the amount of volatility created. Nowadays is where having your hands dip in a couple different things help. And trading the option, they try to catch, not technically before the knife, but the position trade itself, the 20% we were looking at, which was 618, which was 26 to 2750 or something like that. We know where the lock points were. If it dropped out and fell off, we only were trading 2 full lots, 2 contracts on it. Made our profit because we were looking to the asymmetrical at all times. 2700 was our stop point. It got down to 2715 or something like that. Got filled up. Alright, this is where you want to monitor here. You can see how thin that trading is. That is what you call, we have the big bank. Big banks in play right now. Yeah, they're actually trying to hold up this market. That is government to government stuff going on. Well, we know who those little wimps are. We can't call them little wimps because they control the market. They would not allow that to happen. Will not. If they had the 10% stop out today, I would have been a bit surprised if they did it early, drop and drop. That's why we lent on a little bit on that ES to go long. At that point, we know how dangerous it is. We trade what we see, people. Alright, this is our major position for the morning. We're looking for that lock in. You see we have 1 tick in front of what we're looking for as the entry. Want to see the clip and then push down. We're looking for the extended target on this to follow the POC. Go for the 1-to-1. You know exactly where the stops are if you're looking for that. Your entry, exact entry, if you're looking for the exact entry, is 55. 55. Right. So we're looking to be aggressive on the inside. We just entered one on the live at 33.40. So we're just gonna reflect that by the bridge. So we filled on one, we're looking to get filled on the second. Right, we filled on one.
Order filled.
Want to be filled on the second. If we don't get filled on the second, we pull off because we get a 1-to-1 on the trade. Expectation is the kill zone is here. You know, you're looking for structure. You can see why we're looking for that structure itself. Right, we filled.
Order filled.
Now we want to see if we get hunted or we survive. Our stops are at 33.70s. If it does break out, we know exactly what, or we get hunted. Both our stops are 33.70. This is high risk trading. Make sure you know what you're doing. Why it's not reflecting what I wanted to do. Right. These were both my stops are. We do a breakout. Got strong. Stop out.
Stop filled.
Who's in this? Just got strong. Got my face ripped off. Feel like I got flushed. Don't chase the trade. Took the risk. You can see exactly where the stop can get filled, and it pushes out. Or see if I get my ears filled. So took it on the nose. Looking to sell the 28, 20. These are 2 contracts sell. Got stopped out, so there's what 2 contracts on oil. Got stopped out. We're looking to join the sell. $27.15 is your number. I mean $28.15. Sorry. Looking for position. Looking for the fade. Push up, test. Push down. Join the sell. Use that sell stop. Do have a footboard up there. Footboard. Trigger. Wait for it. You can see the zero number. Wait for it. I got wiped out on oil. I lost what? 750 on oil. Oh, 680 or something like that. I'm alive back out. 2 stops out. I usually build an entry, trying to be safe. We were trying to catch structure, break structure. So once you break structure right there, there's a failure of our trade. We're looking at this area here. I was looking at fail. Right, now this is where it becomes a lot more tricky. You can see where that number is. We know exactly where we want to get in there. Optimum entry there is 15 to 20. Monitor which part your high is. High is 16.75. Higher than that will require a lot of that. If you're trading micros, then you can take 12 points a risk, so which is 28.30. You want to take your stop at 12 to 15 points, so 28.15. 2 contracts to 4 contracts on your micro, and start legging out half of it ASAP at 1 to 1. There's 2 contract sales set up there. The reason we taking the longer stops today is because of the amount of volatility. You can see we still using the 7.5 as the entry and exit because we want to flush in and out of this market as quickly as possible. The entry is at 28.15 on the working order side. Nothing lower than that. That is what we can afford. Don't want to be the nene who rushes this market. This is your kill zone here, 10 to 20. I thought I draw this kill zone already. Want to give us a little bit more what we needed for that. So only trade in the micro. account there using money that I gained from no 618 buy.
Order filled.
Got filled. Let's see where the stop is. Stop is because of failure. The width 20 is where they more than likely will go after. Looking for the push to the downside, following the route. Looking to lean out of first half of my contracts at 28.07. 15 to 20 is your entry we're looking for on that side. So what we did is bridge. There's your entry. Take tick. We are in for contracts, micros of course, nothing else.
Order filled.
We lean out of 3 out of our 4 contracts quickly at 28.07 is our exit on. Why you don't want to reflect what we got. That's how we set up on our inside of it. This is the expected rotation. This is your home run trade. You're looking for the home run trade to extend your home run to the downside.
Order filled.
Got filled on 1 at 20.
Order filled.
Right.
Order filled.
Got filled on 07s. Have 1 contract remaining. See it here. So that was your bridge entry right there. You know why we went after that 18, that 20, that 19 really. That was your first stop. Leg in, leg out, quick flip on the trade. You can do what it wants now. This is my home run running here. Want to see how value works. Then look to see where the support is. The support is at 27.80. There's a reason why we're looking at 27.80 as the TP. So you can see quick lean in, lean out, or through the kill zone. Look for the top I kill zone, bottom I kill zone, TP out. Close up shop. Reaction from here would be where you have less risk running now. So that was first shot at it. May take 1, but monitoring on the outside. So made back all the money. I just screwed over on oil. I lost what, 680 or something like that. So made back most of that. On that, this is your kill zone, this is the top of your kill zone. Look to scalp out 10 points off it. We're now starting and scalping. I would advise stand aside for the while I have secondary risk running here. If you do have the trade running now, be very careful because this might be breakout point. Looking at the volume, looking at the delta. I'm looking at the volume and delta very closely. Drop this to 1 minute so you can see exactly what it is. And this is where micro account really helps. In areas like times like this, you can see why micros really help in the market, trade in the market. You can trade with a lot less fear in our case, because we got what, 3 out of the 4 contracts, like 7,535. That's $100 easy we made. It would be 1,000 if you're trading full years, but hell no, will not be doing that. Will not be doing that today. So whatever is reflected, it just reflected the full years trade Don't really care about what 3 question, making sure that we have executions in place. I'm not interested in oil at all. Let's see what the high was. Bam, 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 bam. Highly doubtful we're going for that gap fill. That gap is way up there. Don't even want to see that on the side news. We're concentrating on is the ES. So if it did get the ES, you're trading full contract. Well done, banana hydrogen. Take elixir when you get elixir in this environment. You make it 6.7 points. Run away in 5 minutes. May invest in con Google Gaga. I'll call my guy and find out if I did get filled on my Tesla buy. We're gonna do it 5 contract. You can see the order flow. I wonder why that happening. Most important thing is just safe. Here's where you about make the road. See that 2800 number? That's a rubber made road right there. Most important thing to look at. If you're looking at selling oil, I won't be selling oil again for the rest of the day, is this. London close. Don't have any point of reference, that's my problem here. So I won't be trading it. Look for your London close trade and start fading that shit out. Right, so how I'm dealing with this in the microsite. Already leg out at 3 out of the 4. Want to add one single again to follow the move. I'm looking for the home run trade. I want to be right here at 12. So I'm working what I set up there. Using the same 15 points on the outside, and 2800 will be our TP if we do get filled. Now you're in a highly volatile situation. Look for your VWAP test here. That 2780 would be wicked, very wicked today. get hit in the face with oil this morning, which was unfair to Elvis. Sorry, sorry. I'm trying to actually stop smoking. This last job. Want to get in at 12, get out at 20,000 flat, or else you're looking for this bar as your trigger in and out bar right there, 10 to 12. Already in one contract already, so looking at adding into the sell side, knowing that more or less gonna lose money on the ES side today. Anyhow, I need to go and see about that stuff. Go and find out how much if I have ways freaking take on my option trade on the ES. That's fully completed already. Catch it, you cannot, I would advise that you cannot trade. So either one of the two things will happen. Yeah, I got triggered. I was happy to some alert to come up. Don't want to get slipped. Trigger at 11. I got triggered in at 11. Only trade. Live is active. I triggered. There is that. So anyhow guys, now 10:30 in the morning. Gonna take care of my personal business. We have a lot of money on the line this morning. We're trading a couple big stuff. We do have a gold trade on the line also, so we got my TP filled. Right there, made my 11 points. Went bye bye. Got no aces with that. We reload at 15 and 10, so made my 10 points. Say bye bye for that. So trade small guys, trade smart. Hopefully you didn't lose a lot of money. Yeah, Doug. Nah, I got screwed on oil this morning. Made nice shot off the ES here. That is where the money is. Now I need to go and check on my personal account. I had load running on that side. The reason I had load running on that side is is that as a technical trader looking for stuff, trying to catch a falling knife, having a diversified portfolio and what your hands are in and on. Once you have your hand in or on something, you can see free chats. Free chats suck. Suck. So what I have running on my big stuff is my reason I could actually stream live and share ideas is for these couple of items here. Got in really low on Tesla. Started buying at 187. So trading on Tesla is hard trading micros today on the ES. Got my face ripped off on oil. As I shared, we shared that thing. Those guys didn't trust themselves to actually trade the oil. Same thing would have happened to them. Because as the numbers, the figures we were looking at this morning on oil, we were looking at leaning on specific stuff is what you lean on. So if you're short here, make sure you trade your micros, lose a wider stops, make sure you do not over leverage in the market. 2800 is something that would be in your way. Look for your structure. This is a nice piece of money you can take off in the market if you're trading micros, especially. Take what you can take off in the market. Where we lent in on our ES side right here on one single future using the white stop. Got in, got out. Waiting for the re-entry on that, the actual re-entry on that. It is the 12. Did not get the retest as yet on the 12, so not too worried on the the mini account. Mini account is that, but always have a diversified portfolio is always a best way to handle fall, especially dangerous volatility like this. You can see that VIX is 56. Wow. Yeah, that's what this number here. That's a piss poor number. That's my lord. That's a dangerous number right there. Wow. So don't want to be on that. You guys know exactly why I bought those options. I had those options set up since last night. We always have conversations when the market at while me and three guys, we do analytics ourselves. Doing analytics for yourself is a lonely job, but we do analytics as a team. We have a guy who does specialize. He's a specialist on oil. He didn't get in the first side, so what we do is have a couple of join forces and clear out some money. Like we were able to take out 3x last month. This month isn't looking that bad, especially with that options trade. We might be able to
Order filled.
pull some options out. I think we got filled on the 12s on the ES, so I need to go and manage that. So anyhow guys, trade small, trade smart, lean on stuff that you know, take small bites out of the market. If the market goes against you more than twice, wrap it up, close up shop and get out of it. You can see where the average entry is. 50. If it fails. Your stop should be at 30s for everything. Oops. Yeah, that's not reflecting squat on it. Hit demo accounts. Hit it. Always make sure if you're using, you can use trailing stop. You can see exactly what we're looking for the first, you're looking for the second. You know what it is, where you want to be, how you want to be. This is a 1 minute chart, so nothing spectacular, just look at leaning on specific areas. Alright guys, enough for me today. I hope you had a reasonable trading day so far. Trade small, trade smart, look for your inflection points, have your kill zones built out, look for identify your areas in a way, know what time you're trading. Trading timing is important, always important. Look for your London close stuff. If the 2800 does hold, we know we had zero risk on the ES, got slapped in the face with oil. We have enough bullet to take one more oil trade per day. We're looking to sell at London close. That will be with a wide stop, so we wouldn't be sharing that with you guys. But look for London close. London closes in an hour. I mean 2 hours. London closes in 2 hours. Yeah, now it's 10:55. Forgot the I savings changeover. So trade small, trade smart, guys. See you when I see you, probably this evening. Alright, bye.